Welcome, everyone. My guest today for this sponsored episode is Mike Vough, Head of Corporate Strategy at Blue, to talk about how technology is empowering lenders to take advantage of refi opportunities in this market. Mike, welcome to the podcast.
Thanks for having me, Sarah. Excited to be here.
I'm excited to have you on here, especially because we're talking about some topics today that are so important to lenders. So let's jump right in and talk about why should lenders be focused on refinance recapture opportunities right now?
Yeah, it's a time pertinent subject. The big thing is that what we just saw the last month. So in the last month, we saw OBMI, our mortgage rate index, go from 6.75 to this morning about 6.2. So about a 50 basis point drop in rates. And with that, we saw a corresponding jump in refinances at Blue. So we saw the share of refis that we observe in our system go from 26% to almost 40% from August to September. So it's just a massive jump, and I think you're seeing a lot of pent up demand from the folks who have been sitting on the sidelines from a life event standpoint. Everyone gets, was so nervous about the 7s or the 8% interest rates. And when you get closer to that, 5% psychological barrier, I think people are getting off the sidelines in a lot of ways.
I so agree with that. I mean, and that psychological barrier, it changes, right? So 2 years ago, this rate would have seemed like, no way, I'm not biting at that. Now it's like, yeah, I better jump in while I can.
Yeah, we definitely saw some of that too during the month of September. As we saw, some of our largest lock days were actually days when rates went up. So it is interesting because it was almost like people were afraid that rates might go up, afraid that inflation might go up, the impact of tariffs might drive things up. And after, it wasn't the day where we saw a big decrease, it was the day after when it went up 5 basis points or 10 basis points that we saw a large increase in volume for fear of missing out. There's a lot of FOMO out there in the industry.
Which makes so much sense, and then you think about the mortgage rate lock-in effect, right? So if there are people, the reason why refis have been so locked up is because people have really low rates, right? We're finally getting past some of that. How is that impacting refinance activity and opportunities for lenders?
Yeah, some stats here that I think are showing some signs of life. In 2024, 80% of loans were, below a 5% interest rate. And I mentioned earlier that 5% psychological barrier that I think the industry is getting closer to. Fast forward to year 2025, latest stats that I've seen is I got that closer to 70%. So you're seeing a slow kind of like chug of life events, right? People moving, people relocating, people, upsizing, downsizing, the dreaded D's of death and divorce as well, right? Like you're seeing those life events slowly chip away at that. And as rates decrease, and I do think this five handle, even if it's 5 3/4 or 5 7/8, like if we can get there as an industry, I think you'll see that percentage decrease over time faster, because I just think there's a human psychological barrier. It's almost like when people price something at $5.99 versus $6 or $99.99 versus $100. When we cross that five handle threshold, I think you'll see a lot change there. But it's been hard sledding for folks the last 3 years because so many people refied or bought homes in that 2021 time period in the 2 to 3% interest rate world. And then we woke up in 22 and we're in the 7s and the 8s. So it's just taking a long time to kind of move through that cycle where, the average home buyer is in their home for 6 or 7 years. And we've seen that really slow down the last handful of years with just how high rates are.
Well, and I mean, this is what the industry has been waiting for, right? It's like, at what point do we reach the tipping point so that refi comes back into the picture? But even though that's what they want, there are some challenges, in a refi cycle, which we all know. What do you see as what do lenders really struggle with when it comes to retaining borrowers in a refi cycle?
Yeah, really good question. And I actually want to start in a slightly different spot of the mortgage life cycle. And it comes down to what lenders are doing when they're actually selling and securitizing their loans. So this is a part of the industry that there's not a big light shown on it because it is hard. It's very quantitative and capital markets based. But when lenders are going to make that decision of, do I want to retain or release that servicing, that inexplicably leads to some of these stats that I'm going to talk about in a second. So the loan sales that we observe, we see approximately somewhere between that 40 to 50% of loans are actually sold released, which means the lender is selling the servicing rights to somebody else. So this happens to a ton of borrowers, right? You think you're doing it with, Mike Vogue Mortgage, but then Sarah Servicing is actually servicing the loan, right? And so there's a lot of reasons why folks do that. Lenders in today's environment need cash, so they could sell that servicing right for cash today to kind of keep feeding the machine. But there's other players out there where they're effectively using originations as a way to grow their servicing business, right? So there's that give and take there. So if you're already starting at 1 and 2 loans being released in the industry, it kind of sets you back from a standpoint of how much could you actually retain. And this industry is so competitive, right? Everyone's fighting for every loan, every basis point out there. And you see some pretty gnarly stats from the standpoint of what the average retention rate is. There's a bunch of sources out there, and I've seen it anywhere from 15 to 25% of loans being retained by the actual originator of the loan. That is just a really dismal stat, in my opinion. And then you throw in that you have some behemoths out there that quote in their public, financials that they're north of 60% retention rates, 70%, 80% retention rates. You strip those folks out, that retention rate is even worse than what I'm quoting it at. So it kind of boils down to this need for cash, but then also how competitive this industry is from a standpoint of just trying to fight for every loan or every borrower or every relationship out there.
I think that relationship part is key, because if this is just a transaction you do with your borrower, once every 5 or 7 or 10 or 15 years, it's really hard. It's really hard to have a relationship based on that.
Yeah, I think it comes down to that one of those industry adages of, can the loan officer move to more of that advisor role? And, I recently bought a new house about 2 or 3 months ago, and my loan officer really helped me out from a standpoint of offering some really creative ways to finance the transaction for me. So I know I'm going to go back to him and at least give him a shot when I want to do a refi. And I think that's something that folks in the industry should be thinking about in terms of how do you make your mark? How do you make that relationship with someone? Because, dollars might win out in the long term, but you want to be that first or at minimum second phone call that the borrower is going to make.
Right. And staying in their life, so that if it is even years later, they know who you are.
Exactly. It's such a critical point.
The Trigger Leads bill is something that the industry worked really hard for, advocated for. MBA, other organizations, really worked hard to get passed. So now that it's passed, how does it change this dynamic?
Yeah, to recap for the audience, there's basically been a couple carve outs in that bill to make it so that you could have some type of trigger outreach if you're the originator of the loan, if you're the servicer of the loan, or if you have a commercial relationship, like you have a checking account or a savings account with that borrower. So, I think it does give a little bit of an advantage to maybe some of those players. And typically, if you could prove that, hey, my retention rate is 5% higher than somebody else's, that inexplicably leads to more pricing power for that mortgage originator, so they can offer better rates up front. So, I think that it's a move in the right direction. I mentioned that I got a mortgage recently, and when I filled out that first paperwork, my phone blew up. I had a million text messages, a million calls. I basically stopped answering my phone unless I have a number that I've saved in it now. And that's a bad experience. Nobody wants that. But I do think if they wanted to level the playing field, I think, they're almost a half step there in terms of doing that. But in general, it will give those folks who have that initial touch point with the borrower a little bit more of an advantage in terms of that next loan. And speed isn't a differentiator here. So having that speed to the borrower is important. And I think those folks will have that advantage.
I think you framed that exactly right from my perspective. It's progress. It's good, right? It's better than it was. But, I've been at a lot of industry events in the last couple months, and you meet lenders, especially smaller lenders, feel like those carve outs gave a lot of advantages to some other people. And it's still a very competitive thing.
Yeah, this industry is so competitive, right? So, when there's a little bit of an advantage here or there, it can tilt the scales a little bit, but I don't want great to get in the way of good, right? Like this is a good step forward for the industry, and we could continue to make it better and better, but it's certainly progress, which I don't want to downplay.
So you talked about speed, and I think that that's really important when we're talking about this competitive environment. What role does technology play as lenders are trying to compete? When it comes to grabbing those opportunities, making sure they get to the borrowers. What does that look like?
Yeah, we're seeing a lot of different options, out there in the industry. And, I think it's not necessarily AI that we're seeing here yet, but I think we're seeing just continued progress on the automation front, right? How does, Jody Originator, reach out to 15 borrowers at once? How does he do it in a way that's accurate, right? I think gone are days where, a borrower sees, oh, on CNBC, they said rates are this, I'm going to go call and get a loan. They've already done their research. In some ways, maybe that borrower maybe already has a pre-approval someplace else. And you can't just go to them with some like survey rate or rate that you've seen on the TV. It has to be bespoke to that borrower situation. And as borrowers are getting more educated, I think that means that more accuracy and speed is what the technology is going to be focusing on. And we've seen that. We have some offerings here at Optimal Blue on that front, but we've also just seen that across the industry in terms of what lenders are building in-house and leveraging maybe something from our product and pricing engine to build a unique experience for the borrower. But it all kind of comes back to that point of like accuracy, getting rid of any potential bait and switch. The last thing I think you want to do as a loan officer and call somebody and say, hey, I can get you a 5 7/8. And then you actually run their information and it's a 6.5 or a 6 3/4. You've lost a ton of credibility right there. So we're seeing more and more focus on that accuracy and then the speed to that last point I made as well.
So I want to dig in a little bit there because you even said borrowers come to the table. They've already done some of their own research. They're much more informed than in the past. So how do lenders use technology to be even, their mortgage advisor when they have a lot of information already?
Yeah, I mean, I'll give you an example. As many people in the mortgage industry who then interact with their family or their friends, I have people who reach out to me who are like, hey, should I refi? ChatGPT told me the rate is X, right? So you can kind of turn it on them by, talking about, hey, where are trusted sources that you could look at in terms of how you should, educate yourself even more and more and more. But there's technology there. And, we've released some features, our Originator Assistant, for example, that helps loan officers kind of look at those products that people maybe just didn't qualify for. They needed to move their LTV like this. They needed their FICO score to be this instead. So it's kind of taking that step that the borrower is making, where the borrower is now I got an AI assistant, I got ChatGPT, I got Gemini, I've got, Anthropic, all these different services. I think the technology providers that are helping folks go to that next level, they're coming up with their basically their inverse option, right? Like, hey, yes, they came to you with this offer, but you can make it better by advising them to do X, Y, and Z on their loan application.
Well, and I feel like if you think about the lenders who have that capability versus the ones who don't, like huge advantage to be able to be agile like that. And as conditions change or, seeing those opportunities or being able to say, like, if we just can fix this one thing, here's the opportunity that you have.
Exactly. And it goes back to that previous point of moving from just taking the application and moving them through the underwriting process to being an advisor. And as we see, the share of non-agency loans grow and it becomes less cookie cutter from a standpoint of what are the eligibility criteria, you're going to see that loan officer have to be even more of an advisor as we look at these non-agency products and some of the lack of fungibility that we have on the guidelines there. So it's another trend to kind of, speak to that overall trend of moving from loan officer to advisor.
I love that. Okay, so Optimal Blue just launched Capture for Originators. What does that do? Tie that into this conversation. How does that help lenders as they're trying to serve their borrowers?
Yeah, so we've done some refi work in the past in terms of hey, can you expose our pricing engine, right? And we've sold that to lenders over the years in terms of helping them create an experience, right? Does it we believe that the accuracy of our PPE is unmatched. And that starting point of accuracy is really important, right? You want to lead with your best foot forward here. And so what we do, we've internally developed and work with some partners to create this new product, Capture for Originators, which allows, it's automatically mining your portfolio of previously done business. And it also is helping the loan officer look through their leads and say, hey, you talked to this guy about a month ago. We've kept some notes from that interaction. Maybe you should reach out to them again. And like the superpower of this thing is that in like 3 clicks, you can go from mining your database to an actual stylized product presentation to the borrower that's delivered via email. So this is something that, if it, previous to a product like this, you might be, it might take you 15 minutes to, jump in between your LOS, jump in between your PPE, pricing out each individual scenario, and then taking it and then putting it into, a PDF or an Excel file and then emailing it. At this point, you could be scrolling through here and you could have this out in about 90 seconds to the borrower. So as it's starting off that kind of like baseline point of accuracy, right? It's all connected to the PPE, and then it ends with the speed, right? Of like, okay, now I have these 3 different scenarios. This guy was in a conventional loan, 30-year, but maybe I should put him into an ARM loan. Maybe I should put him in a 15-year. Maybe he was in an FHA loan and I want to convert him to a conventional loan and save the mortgage insurance premium. We could save all those different scenarios, and then you could run them at your fingertips whenever you want. But at minimum, we're doing automatic searches for people on a monthly basis as well to kind of tap the loan officer on the shoulder too. So it's not just, hey, you control your own destiny. It's a little bit of Big Brother helping you and you controlling a piece of your destiny. But we love how it takes it from the PPE to the borrower in about 90 seconds. That's the big selling point there.
Well, and to me, a lot of people, like you said, they're using their own GPT, they're using Chat GPT. Is that accuracy part, the fact that it is, connected to your PPE and the lender knows like, this is an accurate statement. This is what's true. I can rely on this. I don't have to spend time rechecking, like, is ChatGPT making that up? Where are they getting that from? But like, this is what they can actually offer.
Yeah. I mean, the PPE is the source of truth when it comes to pricing, right? So that's where, lenders are managing their profitability across the whole industry. That's where they're managing, if there's ever like a loan officer or originator or a branch specific price adjustment that they're doing from a margin perspective, it's all in the PPE. So it's as close as you're going to get to that point of truth as you will anywhere else in the industry. So connecting that to your origination and your lead gen business is a natural step forward. And we believe it's a better experience to the borrower and loan officer as well.
I love it. Okay. Well, what else is Optimal Blue up to between now and the end of the year or early 2026?
Yeah, we're thrilled to be in the planning stages of our 2026 Optimal Blue Summit, which will be February 23rd to 25th in Scottsdale. If you're an Optimal Blue client, you got to come. This is the best place to hear about everything that we're about to announce. We've, when Joe Tyrell came on, we've kind of changed our release schedule of products. There's going to be a plethora of products announced there, as well as a lot of thought leadership and different strategic things that we'll be announcing and presenting to our clients. We actually just announced our speaker lineup, which includes Michael Phelps. I didn't think that would get better than Tony Hawk last year, but I think Michael Phelps and Tony Hawk are on that same level of athletes. So we're really, really excited to not only have this great content and great product releases, but also going to have a fantastic speaker who everybody in the world knows, Michael Phelps. So I think that's a really exciting one.
No, it's great. I went last year. I'm going this year or 2026. Really excited about that. And it'll be interesting to see what you guys release. You did a whole slew of announcements last year, like pretty big stuff. So looking forward to that.
Onwards and upwards. I know a bunch of things that we're going to release. It's going to be really, really exciting. It's going to move the industry in the right direction, I believe.
Mike, thank you so much for being on. Love talking to you. Appreciate you.
Appreciate it, Sarah.